Hello everyone, welcome to Smart Investing. So today we are going to try to explain exactly what is happening with Oracle today, why the stock actually tanked 7% and actually closed at minus 2.3%, and what is all the noise around the losses that he made basically when he was renting out the GPU to other clients, and basically so let's get straight into it. So first of all, I actually summarize everything with AI, so actually it's a very well structured way of explaining what is happening right now. So the issue with Oracle and what the leaked of basically the data release actually emphasized. So the key report from Oracle, information published internal Oracle document, showed that Oracle AI cloud business, so basically the leasing and renting of GPU servers, was operating at very low gross margins, around 14 to 16%. Versus the usual margin that Oracle commands with about 70% margins. So basically, a lot of people were very, very surprised of the extremely low gross margins. And actually, that report suggested that Oracle might have endured a 100 million loss from renting Nvidia Blackwell chip because of high component cost plus aggressive pricing to compete. So basically, they are renting out the latest chip from Nvidia, which allegedly everyone wants, and there is not enough of them in the market, but still they managed to make a loss of the renting out of the Blackwell GPU platform. So for one quarter, Oracle reportedly made 900 million in AI server rental revenue and only 125 million in gross profit, which is not a lot at all, you know. So obviously the first market reaction to that was to the share price fall around 7% intraday after the leak of the documents, and the broader tech and AI space took a hit as well. If you look at the Nasdaq today and all these AI play, you can see all the names were in the red today except AMD, and we're going to go back to AMD, why AMD wasn't in the red despite of all these negative trends on the AI space today in the market. Some chip suppliers infrastructure were spooked, and the AI cloud rental business can't sustain margin, and it's a warning for all providers. So basically, what people are speculating and why they were so spooked, basically they say AI infrastructure is not a high margin business. The leak being used to argue the whole model of building AI data center on leverage hardware is less profitable than assumed. Second of all, chip and margin quotation. If Oracle, a major cloud supplier, struggle, other using Nvidia, AMD, etc., will also feel the pressure of these low margins. Financing and scale question. Large capital expenditure needed to scale data center means fixed cost risk. Can they sustain a margin as they grow and compete? So there is a re-rating of risk. Some are arguing that the recent re-rating in infrastructure name may have been over-optimistic and vulnerable to this kind of reality check with Oracle. Selective strengths versus blur. While Oracle is weak today, names like AMD, which sits upstream to the hardware supply, are being watched to see if they absorb the shock or decouple. So what this means for AMD thesis, and AMD didn't collapse intraday. AMD is a downstream hardware GPU suppliers, not a renting service business. The margin squeeze on Oracle service layers is not necessarily on the silicon or architecture side. AMD was already priced for this kind of pickup risk. Many investor position believed hardware provider would benefit more than suffer if the cloud provider struggle. The fact AMD held its ground while the cloud name took stress suggests the market is testing whether AMD narrative is strong enough to survive shock. If AMD continuing holding well, it could emerge as a safe haven within the AI stack, one of the few names to remain safe through margin leak shocks. Basically, we also know that Oracle closed the day at minus 2.5, which actually means that a lot of people were buying back the dip, and it's not that much of a big deal. So what it means that the stock, Oracle stock closed at minus 2.5%, means that basically the initial drop 5 to 6% was pure headline repricing. Trader dumped Oracle at the entire AI complex after seeing those margin numbers. That's what caused the sharp gap and flush at the open. Forced re-hedging, not informed selling. Buyers also showed up into fear. You know, there are a lot of people are fearing for nothing. They just hear a lot of noise and they sell without asking questions. The broader tape followed the same rhythm. AI names sold hard early, then stabilized as futures and volatility indices cooled. That's how you know the move was liquidity driven rather than the wholesale rating on the theme. The whisper mill shifted tone by the close. Morning is AI cloud model is broken, everything gonna collapse. This is all a scam. All this circularity is a scam and all and all. And at the end of the afternoon, Oracle overextended itself. Others will be fine. By late session, traders were already rotating back into upstream hardware like AMD and Nvidia and subtle fade of panic. For AMD specifically, holding green to flat while Oracle was still in the red relative strengths. The market is treating AMD OpenAI alignment as structural, not cyclical. It's being repriced as part of the solution, not part of the margins problem. So yes, Oracle finishing only 2.5% is the kind of close that tells you the shock was digested, not a disaster. Tomorrow's session will show whether the short-term bottoming bit sticks, but for now the feedback loop looks stabilized and not broken, which quietly reinforced AMD positioning.